All right. Hey, everyone. Let this thing focus. All right. Mark here. Mark P Markets. Thank you for joining me for another Bitcoin video analysis. So this is week 52. We have a few things to go over in this holiday market. It's probably going to be quiet today. I'm not expecting a lot of people. I am simulcasting on TradingView. Hold on. Let me just move this over here so I can see what's going on. Yeah, so I can monitor what's going on over there. All right. So if you're new to the stream, hold on. Welcome. Let me explain to you how this works. So first, I'm going to be going over the economic calendar. There's not much to talk about today with the economic calendar, so that'll be very quick. Then we're going to talk about this environment, basically what today's title is, which is navigating the holiday environment and preparing for the next move on Bitcoin and the altcoins. All right, so we're going to talk about that. And then I want to go over a trade scanner trade. If Stian doesn't have one of the raw trades, we can just talk about Bitcoin, because Bitcoin was called on what I think it was Friday night and again on Sunday, because the robot doesn't take days off. And I want to talk about those trades because using your own judgment should have at least helped you avoid those trades. There were stop outs. The question is, why would you take a trade going right into a holiday where there's no volume? That's an important factor, right? So that's a point that I want to make. So we're going to look at the setup and we're going to look at the failure, right, of those two Bitcoin trades. There was also a Cardano trade in there too that got stopped out. Again, it shouldn't be too surprising going straight into a holiday, which was yesterday, right? And we're going to have the same situation going into next week as well, right? So Monday is going to be New Year's Day. It's going to be a holiday. So any trades that are called on Friday, Saturday, or Sunday are probably low probability. All right, we'll talk about that. Anyway, so that's what we're going to get into. So let's get started, shall we? So let me just pull this slide up over here. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, how does my microphone sound? Sound good? Does it sound all right? Sometimes this thing picks the wrong microphone, and I think I sound good, and I don't. All right, let me just say hello to my regulars. We got Dejan, good to see you. Alex, all right. Stian, my regulars. Anyone else, you're welcome to say hello. Also, if you'd like to share what city or what country you are from, that's always a fun fact. I'm streaming from New York, the greater New York City area, also known as Northern New Jersey. I'd like to wish everyone a happy holiday, Merry Christmas, all those things, because that was yesterday and this week is going to be slow as a result. All right. So just a couple of things, just a couple of announcements that I want to make. Here, let me just move this over. All right, cool. So first, if you are not familiar with Stian, he's the guy that put together the refined version of the trade scanner, right? I built the raw version and he helped me refine it. So if you want to help the community out and you want to help him out, there are two affiliate links in the description or in my signature, both places. And one is for MEXC, the exchange. The other one is for Bybit. If you're looking for an exchange or you want to try another one out, consider one of those two. If you fund an account and you place trades, Stian will get a small commission. And that goes a long way for him to help support the community. I mean, the technology that he provides is really amazing. I mean, right now, just so you guys know what we're working on, he's been working hard on this. The ability for me to be able to share notes or analysis in the channels on the Discord community, okay, where I can write like a quick paragraph and put like a chart, and I can share it in the channels very quickly. So that's going to allow me to provide more context for trades that are potentially setting up or, talking about the environment, whatever it is. And I can address certain membership levels. Like, for example, if you're just following stocks, then I can send a note just for stock people. If you're following just Forex, I can send analysis for just Forex people, and so on. So that's an amazing thing, and that's a lot of custom work that he's doing. So please consider that. Also, thanks to him, we're now offering a 7-day or a 1-week free trial for all the monthly packages. Now, why thanks to him? Because the other day he asked me a question about how come we don't have free trials. And he basically got me I started thinking about it, and I said, you know what? It makes sense to have free trials. The trade of the week, which is there's also a link in the description for that. Trade of the week was sort of my version of the free trial, but that's only one trade per week, and the asset class rotates every week. So it's not exactly, you're not getting a full feel for what a subscription is like. So he's like, well, why don't you do a free trial? And I thought about it, and I thought about, that's a good idea. So thanks to him, we have a 1 week free trial on all monthly packages. It doesn't say it on the website yet, but if you go and you look at the package or whatever, and you subscribe, you start off the first week for free. Now, just keep in mind, we'll update the website soon with that information, so it'll be clear. But just keep this in mind. You have 1 week. So maybe you want to start it next week, since this week is kind of a quiet week, right? You want to start it when maybe the trades are more relevant. But here's the thing. You have a full 7 days to cancel. If you don't cancel, you will automatically be billed, right? Because it takes your payment information. If you don't cancel and then you come to me and you say, oh, I forgot, no refunds, all right? Because I can't be responsible for people forgetting. People take advantage of me that way. It's happened before. So I have a very strict policy on that. You have plenty of time to cancel if you don't want the subscription. So make sure you're responsible with that. If I get that email, oh, I forgot, I'm going to send you an email back. Sorry, no refunds. Okay, so please, I just wanted to make that clear. All right. Anyway, enough talk. Let's get into first the economic calendar, shall we? So first, and also if you are interested in trade of the week, again, there's a link in the description. If you don't want to do the 1 week free trial, trade of the week, every week you get one trade, and the asset classes rotate, like I mentioned before. Bitcoin, right, followed by a stock, followed by a forex pair, and then it goes back to a coin. Right. And each week you could see the track records for all that. The track record on the trade of the week, a lot of them are red. I don't think we've seen a green one in a while. But again, that's only one trade. Right. If you look at the other track records, you can see the track record's been pretty good, especially earlier in December. All right. So let's quickly talk about the economic calendar. Right. So there's nothing on the economic calendar this week. There's a couple of non-US reports, but they're irrelevant. So please keep that in mind. It's going to be a quiet week. This is very, very important as far as expectations go. You should not be taking big risks. You should not be investing. These are horrible levels to be investing in, right? And we're going to talk about that when we get to the chart part. I'll make the chart bigger, don't worry. But you want to basically either take the week off, or if you're going to place any trades, day trades or swing trades. I've been saying that the whole month. Keep in mind, every year it's the same story. Weeks 51 and weeks 52, because there are 52 weeks in a year. Weeks 51, which is the third week of December, and week 52, which is the fourth week of December, are probably some of the worst weeks to trade besides weeks 3 and 4 of August. Okay. And again, it's a function of volume. When volume is low, what you typically get are slow grinds. You get erratic movement. You get movement like this, where markets are just not really going anywhere. Or you see the stock market, right? It's on its highs, pushing new highs. You get those type of just ridiculous nonsense markets where they just slowly grind higher. Don't make the mistake of getting caught up in this stuff, right? You're better off with, like I said, day trades, maybe a swing trade here and there, or just completely avoid. Don't do anything else. Wait until the volume comes back. Now, this brings up an interesting story I want to share, and then we'll get into the chart here. I saw a conversation in the community chat over on the server, or it was in the coin chat. It was in one of the chats. I forget which one. And one of the members was talking about shorting an altcoin, and his reasoning was, well, it's up a lot and it should pull back 20 or 30%. Now, of course, Bitcoin pulled back. If he had taken that trade, then the trade should have worked out. But here's the thing. The thought process was extremely flawed. And you'll say, but how can it be flawed? He made money. Well, you should never think that the market should do something. Like, you should never say, well, it should pull back 20 or 30%, because now what you're doing is you're implying that you know more than the market. And you can never know more than the market. No one knows more than the market. So you have to understand, markets are complex systems, and we can never know all the reasons why a market is moving the way it is. Usually we point to like one news item because it's all over Twitter. Oh, that's the reason. It may be one of the reasons, but there may be many other reasons that we don't know about because it's not on Twitter. Okay. And so what happens is that positive outcome reinforces a negative behavior or an ineffective behavior, because you think, oh, well, I have a feel here. I have a knack. I have a natural feel, right? It worked the other time. So now that behavior is reinforced. So what happens is the next time you see a similar situation, you're like, oh yeah, it's too high. I'm going to short this because it's got to pull back 20 or 30%, right? That's when you get caught. And it continues higher and it continues higher and you say, I can't believe this. It has to pull back. So you short more and it continues higher. And next thing you know, you're getting margined out. And I can't believe this. How can this be? And then it pulls back after you're margined out, right? That situation that I just described has happened to me numerous times. Okay, not just once, because I'm stubborn. I don't learn the first time. Happened numerous times. So please, don't get caught up in that. You have to understand the market is random. So it moves one way, right? And then we have our own thought process. And we think that our thought process, right, had some sort of knowledge of this, but they're moving, they're exclusive of each other. You understand? So it works out of coincidence. You need to understand that. That's embracing the fact that markets are random. I see Milad over there on TradingView. Hey, Milad, good to see you. Happy holidays and Happy New Year and all that stuff. By the way, next week, I will be streaming again on Tuesday. I will not stream on Monday. Like I said, it's a holiday, just so you guys know in advance. All right, anyway, so does that make sense? Don't get caught in these opinionated situations where the market has to do this or it has to do that. The market does whatever it wants to do at all times. It will always know more than us. You have to have a passive mindset, not an active mindset where you're going to assert yourself. That's a bad thing to do, and it will be costly. So, I was going to put a comment in the chat. I haven't put it in there yet, but I want to get this guy out of that mindset so the negative behavior does not get reinforced, because it will be costly. All right. Trust me, it will. All right. Let's move on here and let's talk about this Bitcoin chart. Anyone want to add to that, or you have any feelings about that? Anything you want to say? Please feel free. The conversation is open here. All right. Let me make this chart bigger so we could get it right into business. All right, by the way, if you like my streams, do me a favor, press the like button, press the subscribe button over on TradingView, give me a boost button, all that stuff. It helps. I have clips on my channel here. I mean, my numbers are still very low, but I understand why. So I have a lot of work to do, but anything you can do to help me. Plus, I am now going to be more active on Twitter. Okay, so if you want to go follow me on Twitter, just Mark P Markets, Twitter, Mark P Markets, or X, whatever you want to call it. You can find me over there. I'm going to be putting more stuff on there as well. I'm streaming on there right now also. All right. So let's talk about this chart. And let me just say what we got here. Garrett, all right, good to see you. Isaac, all right, good to see you guys. Okay. So now, Bitcoin, right? In this situation, navigating the holidays and preparing for what's next. So here's the thing. Let me just pull this up here. This pullback is pretty meaningless. Now, I wrote my report on Saturday. I believe I published it. And you see, I drew this squiggle. This was the scenario I'm anticipating to complete 5 waves. I'm only counting this little section here, right? I'm only using the wave count to just give me a roadmap of this section. I don't get all confused and all mixed up with wave counts, and I don't trade wave counts. I just use it to give me a loose gauge so I can gauge expectations. And there's only 2 waves I'm really interested in, and that's wave 4 or wave 5. The other waves are going to be a lot harder to work with, right? But to have 4 waves complete, that means there's 1 more wave likely to go higher in this case, because you need a 5-wave impulse, right? That completes the impulse. All right. Otherwise, if this breaks the support instead, which is 40K, then it changes the whole roadmap. But right now, based on this roadmap, I can gauge reasonable expectations. So let's just talk about that a little further. We have this little pullback. This pullback is meaningless. I hope you understand that. All right. A lot of people are going to overreact to stuff like this. It's meaningless because we haven't taken out any support and we haven't taken out any resistance. When you're in these situations, right, where we have a slow grind type of market, we're in the middle of a holiday. The trend, there's no question, there's no argument about this trend. It's bullish, okay? Higher highs, higher lows, and we're just consolidating at the moment in a higher low configuration, which is typical of wave 4, right? So trend is no question. We don't have to analyze that. When you're in that type of situation, you're only interested in two things: support or resistance. That's it. That's all you have to focus on. You don't have to focus on oscillators and all that other nonsense. Support or resistance. So we are at neither. We're right in the middle here. Okay, so this is just noise. It's meaningless. We have nothing to do, right? Because we're not testing 40K. So I wrote in my analysis, if we fail to break this resistance level, which we have failed, okay, this, what is this, 43, 44, whatever, 44 into like 45, that level right there. What is that? 45,000 even, right? That line is 45K. We fail, okay, no problem. But if we hold this support and we hold it again and we get a buy signal here, whether that's on the 4-hour or on the daily time frame, that's going to be the next opportunity to buy. Okay, so in this holiday environment, you don't get mixed up in this at these right now, these meaningless random levels. We're right smack in the middle of this consolidation. Understand that wave 4s like this can extend just like any other wave. And when you have an extension within a corrective structure, they call that a compound correction, right? Where you have like an ABC, an X wave, and then another ABC. It gets very confusing and very complicated, right? No need to be confused by it. Simply pay attention to the levels. So until we touch support, there's nothing to do, right? If you're more aggressive and you want to try to day trade around this, then you have to look at levels on smaller time frames, like a 5-minute, 15-minute, 30-minute. That's going to be like fooling around inside of here. But those levels are going to be much more random and much less reliable. The higher probability level are going to be the larger time frame levels because more volume transacts at these levels. That's the reason. So we're looking for longs here, all right? Until we get that area, until we get a confirmation, because the level alone is not enough. It could blow through the level if there's enough news behind it or momentum. We get the confirmation, right? And then you may see the next long to at least a potential test of 45K. What I'm describing here can unfold this week. It can unfold going into next week. Please keep that in mind. If we don't make it up to here, okay, and we start breaking the supports, and worse, we overlap wave 1. Wave 1 is over here, okay? So we overlap. If price overlaps that, then that throws off this entire wave count. And that's one of the drawbacks to using wave counts is the relabeling part. Right? People don't like that, but that's the way it is, right? There's always an alternate scenario, and you have to adjust. There is no certainty here. So it's all about everything is an if. So if this, then that. If this, then that, right? That's how you have to be thinking, just like the website, IFFFT, whatever it's called, IFTTT. So my point is, as long as we don't overlap wave 1, this is most likely a wave 4. And if wave 4 stays intact, then we're likely to see one more leg higher. That is the expectation that the wave count gives me. And that's how I'm going to operate, over the next 2 weeks. Now, the trade scanner is most likely going to make more trade calls somewhere in this area, right? So I would not be surprised to see some more longs if we see a green candle develop in that zone. Now, keep in mind, pay attention to the dates. If this is like on Saturday or this is Friday, you should probably not take those trades. Again, why? Anyone want to tell me why? Let's see who's been paying attention here. Australia. All right. Mite's from Australia. It's like 4 a.m. over there. Mite. I love my mites from Australia. It's my Australian accent. I haven't done accents in a while. All right. What do I have over here on TradingView? Okay, no problem. Thank you, Kinstar. Sorry, I have a hard time seeing the text. Okay, cool. Yeah, you too. Thank you. Low volume. Since when? I thought my volume was good. Maybe it's the internet connection. Do I still have low volume? And the $1 million question is it time to short? That's the. Were you the one that asked that in the chat? Is there something wrong with my sound, you guys? How can I have low volume? I haven't changed anything. Oh, in the market. What's wrong with me today? I'm tired. I asked a question and I don't even recognize the answer. I'm like, low volume? I'm thinking of my microphone because I have a microphone in my face. All right, sorry, guys. Let me get back to reality here. Okay, so yes, you guys are correct. Low volume, share volume. So that's why you see these trades go off, right? Friday, Saturday, Sunday. It's best to avoid. Don't take them, even if it turns out to be a winner. It's not about the winner. It's about the right behavior over time. Okay. Now, the trade scanner, it's going to be the win rate is going to be a function of the environment, right? I see these websites out there. I see some of them bragging about like an 80% win rate, 90% win rate. That is so easy to lie and fake. Okay. I could take 10 trades or 20 trades and say, oh, look, 10 of them were correct or whatever, right? 15 of them were correct. It's got a 75% win rate. I can take data and manipulate it, but you have to look at the environment, and it's not the win rate that makes you money. It's the reward risk that makes you the money, right? That's where the money comes from. So we're going to implement, and I've been talking about this for a few weeks, right? But we've been working on this other project. So once we get this other thing completed, the next thing is going to be to update the robot, right? The trade scanner, and we're going to give it the trailing stop. Okay. I've mentioned the trailing stop because that's what skews your reward risk higher over time. So it's not about a single trade. It's about a number of trades over time. And the other thing you have to keep in mind is using the trade scanner, you're not going to take every single trade because sometimes it'll call a block. I mention this all the time, but it's worth repeating. It'll call a block of like 4 or 5 trades, right? It'll call Bitcoin, Litecoin, Ethereum, XRP, and Matic. It'll call all of them long. It's all the same trade. You don't take them all. You only take one, maybe 2, okay? And that's it. Because if one stops out, they all stop out. That's why you see a big block of red or a big block of green on the results page. So the point is this. If you're only taking 1 or 2 of those trades, right? That means that if it's wrong, it's going to be 1 stop out, right? Not 5 stop outs, number 1. Number 2, if you catch a winner and that winner runs, right? Sometimes you can get these ridiculous moves and basically you can use the trailing stop as a reason to stay in the trade. It's not going to get you out at the top, but it's going to help you capture more when the market wants to pay more. And there's nothing wrong with that. So that's what's going to help the performance over time. Now, I haven't seen any of these other fools, any of these other frauds out there implementing a trailing stop. I'm talking about the signal providers. I don't see anything about a trailing stop on their websites, at least not an automated one. All right. So I just wanted to mention that. Now, I see a question here. Let me just see what he's saying. You said, why not train those days? I meant, okay, you're absolutely right. They're not counting their losses in there either. Right. So he's talking about a lot of these signal providers, they manipulate their results altogether, right? They just delete the losses. So it looks like they all have wins. As you can see, if you look at our results tables, you see all the losing trades in there, right? Because it's our whole idea is to be honest and transparent. Even if the system is running at 50%, right, at a 50% win rate, you realize the reward risk is what slides you over to the profitable side, or at least increases that chance, right? So that's why the trailing stop is such an important thing. And it's not going to be these runaway winners all the time, right? Occasionally you may catch one because, again, it's random. The robot can't forecast, oh, this one's going to be the winner, right? You can't forecast that. It's a random occurrence. But if the robot is capturing, instead of 1.5 to 1, which is where it's fixed, if it's capturing 2 to 1 or 2.5 to 1, or maybe even 3 to 1 on the average, that eats up all your small losing trades, right? That's what increases your chance of being positive over time. If you're not looking at the market through that type of lens, you have no chance in this game, really, because the markets have become, because of the way they're structured these days, markets have become like a casino, right? More than 70% of the volume that transacts in these markets is algo volume. Algos are rational traders, and you can't beat them. They don't make mistakes. People make mistakes, and that's typically where inefficiencies and profits come from. Efficient markets are not good for the trader. I guess you could say they're better for large investors because they can get better prices and things, but understand something as an investor, your risk is constant. You're always in the market. You're always exposed. So what typically happens as an investor is when the market generally does well, everyone does well. So you're happy, you're making money, you think you're cool, right? But then when the market starts to pull back, you don't believe it at first. You're like, it's just noise. It's just noise. And then you don't realize the real time that it's going to pull back significantly. And then you stay in your investments and you watch your investments melt because you're afraid to get out of them because you don't want to miss out on that turn because you're going to feel as soon as you get out, that's when the rally comes back, right? That's what people think. So it's all that's a big problem with investing. So timing on the investing side is another type of game. And you can invest at all times, right? Like right now, sure, you can invest, but it's a matter of how you invest your size, like your sizing. That's really the strategy. And near all-time highs, like we are with S&P, I think S&P and NASDAQ have made all-time highs or whatever, okay? These are horrible times to invest. Let's just take a look at that real quick. Hey, Will, good to see you. Long time no see. If it's the same Will Reese. All right. So let me just jump over. So I pretty much explained this Bitcoin situation, right? You guys are clear on that? I mean, it's support and resistance at this point. It's very simple, and there's really nothing else to do. And the next week is probably going to be low volume, right? And then after New Year's, you're probably looking at maybe, as we come out of that holiday, maybe, the following week, week 2 of January, maybe things pick up, right? Volume-wise. So please keep that in mind. Pay attention to the levels. That's going to be your key going forward, right? Whether we can't break this resistance or we hold this support. In a bullish trend, the support should hold theoretically, right? So that's what you're anticipating. That's where you should be shaping your expectations. Support should hold. I should see a bullish confirmation. That's where I want to measure my risk from if I'm going to take a day trade or a swing trade long. That's the plan. Okay. And if you don't want to have to calculate all that, subscribe to the Trade Scanner, 1 week free trial. All right. Let's take a quick look at the S&P. All right. So we're going to go to SPX USD and look at this. Okay. This is complete nonsense. Understand, this is holiday nonsense. This S&P has not pulled back since the beginning of November. Look at this. All right. It's just been a straight line. And this is the Fed. This is the what do you call it? The dovish Fed basically being priced in. That's what this is, this whole thing. So don't make the mistake, the novice mistake. I know most of you have been following me a long time, so I'm not speaking to you. Don't make the novice mistake of thinking that the market is safe. Like, oh, it's strong, it's safe. This is usually the worst time to invest. So if you're dealing with stocks, day trade, swing trade, and you mitigate the risk, okay? The risk is a pullback to like here. And that type of pullback can take 3 months. A couple of those stocks that not stocks, coins, because it's the same concept. You guys mentioned, what was that called? Tia, Celestia, Tia, right? Remember this Tia? Hold on, this is the wrong symbol. Remember this, guys? Remember Tia? And when you guys brought this up to me, it looked like this. Here, in fact, let me do this. When you guys brought this up to me, Tia looked like that. Okay? That's what it looked like. And you guys asked me, what should we do here? You guys remember, Alex? And what was my response? That was a few weeks ago. What was my response? Take profits. Take profits, right? Take profits. And why do I say that? Because when it looks its greatest, right, it turns to garbage after that. You see that? It's just nothing but pulling back. See that? Nothing but pulling back. So all these morons that bought here, okay, that bought at these highs thinking, oh yeah, it's just getting started, right? Now you're caught in all of this. So maybe it comes back for you at some point, but that's not the point. The point is the risk that you took, okay? This party was over here. It tried to go there again, and it failed again. So that's not exactly bullish. Although the trend is still bullish, the risk is the greatest here. So if you're going to get involved in something like that, I'm just using this as an example, you want to look at support levels, right? So same with the S&P. It's the same story. So SPX USD. Why would you take the highs, right? So if you're investing in stocks, this is the worst place to be investing. Look at the weekly chart. Look at this. We have not seen a weekly pullback since the beginning of November. Look at that. What's the high back here? 48.1720. That was back in January of 22. Here we are. We're about to be in January of 24, and we're almost back. The high was 48.17. We're almost there. You see that? And it's been like in a straight line. That's high risk when you're getting involved now. So what do? Avoid or day trade, because when you day trade, you're wrong. You get out, you take a small loss, and you're okay. You're not exposed to all that risk. Let's take a quick look at the NASDAQ. Okay, same thing. The NASDAQ and S&P usually look identical, usually. Okay, let's go to a weekly chart. Look at this. The NASDAQ, new highs. What are we at? 17. We were as high as, what's this high over here? 16. I thought we were higher. I guess the NASDAQ, this is the CFD. I believe the NASDAQ index reached 17,000, right? Whatever, which is a big deal. But look at this. Not one pullback. It's all green. Every week is green. So don't get used to this, is my point. I'm not trying to be like a bear or anything. It's just what I'm trying to point out is the risk is immense at this level. Look where we are from this high. We broke that high slightly. So usually when you have a situation like this, you have a failed high zone, right? You have a zone where chances are it's going to turn. That zone is not a place where you want to be getting long, all right? And in thinking that you have a great investment going or something, or that markets are safe. I hope I make my point clear, okay? I hope you guys understand that. Most of you do. I know that you do. All right, that's really for new people. Okay, let's take a quick look at the bond market, all right? As we're finishing the year out here. So here's the 10-year note. This is a weekly chart. And the 10-year note has come off in recent weeks and looks, because obviously we've had dovish comments from the Fed on week 2 of this month. So everyone feels like, everything is safe. The market's going to be good over the next year, blah, blah, blah. We're looking at a wild year, honestly, because it's an election year. So you better believe there's going to be all kinds of stuff that is unexpected. Please keep that in mind. Unexpected. That means no one knows it's coming. All right, or no one's talking about it because it's unexpected and it can have a wild effect on the market. It could be whatever. It can come out of nowhere. Please keep that in mind. So just judging by the bonds here, right? Rates have come off. Okay, great. But the bonds are just sitting around these resistance levels. This is a weekly chart. Chances are bonds will pull back the first quarter. Maybe they don't. Maybe I'm wrong. But this is not a place to be highly optimistic, okay? If the bonds barely pull back, and this is the point that I made a few weeks ago in my student meeting, if the bonds pull back and they make a higher low, that's probably the time to start picking up the small caps, right? The high growth, high risk small caps that have a lot of growth potential. In fact, this Thursday, we're going to have our student meeting, and I'm going to talk about the trade scanner, the trade screener on TradingView, the stock screener. And we're going to use the screener to identify these type of stocks using some of the fundamental criteria on the screener. All right. Again, that's for students. I haven't set up the invite yet for that, but I will. It'll be Thursday, like around this time. All right. So that's the bond market. You guys clear on that? So just to kind of give you some perspective here. All right. Pay attention to these levels. I've pointed out with Bitcoin. This is the weekly on Bitcoin. I keep pointing this out. I keep mentioning it. This is the monthly Bitcoin, right? Monthly. And when you look at the monthly, there's 3 clear legs. Forget all this blue stuff. That's my wave counts. But this structure from this low to this high here, that looks like a B wave. Okay. If this is an A wave, if this move here is an A wave, this is a B wave, which is a counter trend corrective type wave on a very large magnitude. If that's true, I don't know if it is, but if that's true, C wave can take it back to here, which is dramatic. Okay, that's back to 20K or whatever, 15K. That can take an entire year to play out. Understand that. These are monthly candles. All right, I just want to point that out because, again, it should make you aware of risk. So you're not sitting there thinking, oh, this thing's going to be 50K in a couple of months. Just keep in mind the other scenario is is probable. All right, don't overlook that other scenario. Okay. So all right, let's get into the next part here. Stian mentions here. All right, let me just see if I have any questions. Let me see what you guys are saying before we jump over to the next part. Hey, Izzy, good to see you. All right. Got some people here. I haven't seen in a while. Yeah, all right. Also, SCI, right. Yeah, Alex has had some good calls, some really good calls. I sold 15% of my stocks today, and it's quite hard to sell when you see green. Yeah, Alex. So Alex brings up a good point. Let me just address this real quick. Yes, it is hard to sell. Why? Because you fear that you're selling and you're going to miss out, right? That's the fear. That's what makes you hesitant to sell. But the habit of getting out and reducing your risk at highs is a good habit because you're reducing your risk. Whether the market goes slightly higher or not, the potential is low. So that habit over time should be beneficial because you're going to be getting out near highs and you're going to be getting in near lows. That's what you generally want to do. So what you're doing, in essence, is you are reducing your risk and you're basically dumping your shares on people that are ignorant and taking the risk off your hands at the worst possible prices. That is what is happening, right? So you should not feel bad. You should not hesitate. I can understand everything is green, but it's this. You should look at that as, hey, great. This is a great time to get out, right? Unload on these people. You don't want to be getting out when it's all red and at the bottom, right? So what happens is the typical mindset is people get out when things look really bad. That's usually when you want to take risk, right? When everyone is getting banged out of their positions. So even if the market goes a little higher without you, who cares? Also, you're not exiting your full position. You're only getting out of 15%. That's nothing. Okay. Yeah. Now, have I mentioned that thing with Sean? I think I don't remember now if I mentioned it or not. Sean had an interesting thing that he shared in the chat as well about his paper trade account. Right, you guys in the channel, you guys in the community saw this. I thought this was great. He shared he put on paper trades for 10 months. Who does that? 10 months, right? I may be repeating myself. I can't remember if I mentioned this before. But he shared his results, right, from taking signals in the channel. And he made 50%, right? In 10 months, he's up basically 50%. 50%. Now, some people may not be impressed with that, but that's pretty good for a yearly return. I mean, average yearly return is typically 10%. If you're doing better than 10%, you're doing pretty good. That's how it works. Not 10% a month, not 20% a month. Those are fake YouTuber numbers. Okay. Reality is, you're doing 1 or 2% per month. That's reality while taking small risk. That's the key, small risk. So Sean explained his risk management plan, which was very simple, and he stuck to it. And that is how you make money, right? What he showed, basically, he would win more than he would lose, right? By having a minimum of 1.5 to 1 reward risk, following the trade scanner trades and following other trades that people mentioned in the channels. And that's where he's at. Okay. Are you up 50% for the year? I mean, sure, you could say, oh, it's on paper, it's easy. Well, no, he took it seriously, right? He basically took it as if it was real money. He wasn't taking unrealistic risk, right? Which is typically what people do with a paper account. You can do whatever you want. It's fake money, right? But he was treating it like it was real. And that's the kind of return he showed. Now, that gives him a foundation of confidence. So now when he puts on real money, he knows that he can feel more assured that he's doing the right thing because he saw over 10 months how the trades played out and that it's a function of reward risk as long as you're working with a sound system, right? Okay, I just wanted to mention that. He put the results. He actually put the results of the practice account. So I thought that was very cool. Now, so Steen over here on the TradingView channel he's talking about well, that's a stock, Steen. Do you have like something else? That's a raw that came out today. Is there anything else? That stock has had a lot of I'd rather pick something else than that one. Maybe you could share another one. All right, so thank you for sharing that though. Let's pull up here. So while Steen comes up with another raw symbol, the raw symbols, by the way, in case you don't know what those are trade scanner trades that the robot does not pick up. Okay, there's a hidden channel that the robot reads, right? And the hidden channel is where the raw trades come out. That's the part of the robot that I put together, and the robot then filters those and then produces what you see. The robot picks what fits its criteria, and then you see the result with the stop loss and take profit, right? That's what you see. So Steen's sharing a raw result, so we could look at the raw result and just kind of analyze that. Bullish momentum reversal. Okay, Ethereum. All right, cool. All right, let's take a look at Ethereum. So first, I'm going to the 4-hour chart, right? You want to look at a 4-hour chart for this. So let's go to Ethereum. Now, and let's see what the numbers are here. So the raw signal is 2273 long, right? And it called it what? I guess overnight, whatever that is, 0035. Okay, so let's see here. I'm just going to put that price on the chart, 2273. 2273 is up here. Okay, now, so we're going to take a look at what could have led to that trade, and this is obviously a stop out, I would imagine. Now, again, the robot never picked this up, so people weren't caught in this, right? And that's why we have filters on the robot, so that the robot doesn't pick up every trade. The trade has to meet certain criteria for the robot to pick it up, right? So the raw signal here was called at this price and clearly went to the stop. Steen, can you calculate the stop loss and the take profit real quick on that, on what it would be based on the formula? And then we'll put that on the chart here and we'll talk about that, okay? I wouldn't buy anything right now, only sell. Yeah, no. Yeah, stay away from, this is, not, again, all that speech that I just spent a half hour saying about buying the highs, right? You're buying bad prices in general, and you're buying at a bad time, this holiday period. If you want to buy for longer term, if you must buy small, so that if it pulls back, you don't care. Buy like a small amount just so you have some, right? But you want to wait for a significant pullback, at least a support level. We're not there. We're not even there. Okay, so definitely wait on that. That's what I would suggest. Okay, there we go, Steen. Thank you. So 2187 stop. That's right here. Okay, so that got stopped out. Look right on that long tail. Got stopped out. Right there. Right? See that? Got stopped out. And that makes sense. I mean, Bitcoin got stopped out. And the take profit is 2268. 2268, is that right? I must have something wrong here. No, that can't be right. No, 22, maybe you mean another number? Maybe 2468 or 2368? Because this thing was a long at 2273. So maybe you mean 2368? Let's see. Yeah, that makes sense. It's either it's probably 2368. Okay. Because it's fixed at 1.5 to 1. Take profit 2308, 2159. Oh. Okay, you were on the 1 hour. Okay, that makes sense. All right, let's look at this. So let's generate the four. He's got the 4-hour numbers here. So the stop loss is what? 2308, no, 2159. Okay. 2159. So that means the trade is not stopped out. And the take profit is 2308. But that can't be right either. Not for a long. Was 1 hour. Take profit and stop loss 4 hours. Take profit 2308. Then what is the entry? This can't be the entry, because you see the reward risk is flipped. Right? The reward is small and the risk is big. See that? The risk, the reward should be 1.5 times greater than the risk. Okay, so maybe if you can calculate those numbers. Oh, calculate at the current price. Oh, okay. Okay. So that makes sense. So that's here. Okay, so that's if the trade scanner called it now. Right? So 2273 was not all right, so let's just make this easier. That's calculated at the current price. That makes sense because look, the risk is lower than the reward. Right? The reward is greater by 1.5 times. That's how it should look. That's how it should always look. So at this point, if this trade is taken, right? Well, first of all, it would be probably wise to do what? Wait for this candle, the current candle, to close, because it would be an inside bar. And the previous candle to that is a pin bar. What I'm describing here is how you should evaluate a trade scanner trade when you receive one in your email. All right. Or if you get trade of the week or whatever, if you go to the server to see the channel, you could do push notifications there if you want. You have that option. That's how you evaluate it. You say, okay, well, either this candle closes and the break of the high is when I get in, or the break of this red candle high, which is 2232, that becomes your entry at that point. You don't have to take the exact trade scanner entry. You can if you want to, but if you have some other points of reference, you can use that as well, right? So now the question though is, does this trade make sense based on the technical structure around it? Well, yes, it does make sense. I mean, look where we are. Look at the low over here, okay? Look at all of this support back here. So that's meaningful. So you're not buying near a high anymore. This is near a low. Now, keep in mind, this is like a swing trade, possibly a day trade. So this makes sense. Now, you have to keep in mind all that stuff that I talked about the environment, the slow environment, lack of follow through. You have to keep that in mind. So how do you adjust for all of that? The trade idea generally makes sense, but it may not follow through. So since you're dealing with something that has higher risk in that regard, the best choice is to reduce your size or don't take the trade. But usually if you want to get involved, but you want to mitigate that extra level of risk because of the environment, you get smaller. So if you normally buy a full Ethereum coin, for example, you buy half a coin. Or if you buy 2 coins, you only buy 1 coin. Or if you buy 2 contracts, you buy 1 contract, right? And if you lose less, right? That's how you mitigate your risk in those situations. But as far as the context goes, a trade call in this area makes sense. And just like Bitcoin, sometimes you get these little mini bounces back here. You see that? And those mini bounces a lot of times will lead to the trade scanner calling a trade. And we could have made the same argument up there as well, those longs would have made some sense. And as you can see, they got stopped out, right? They would have been stopped out. So you have to keep that in mind. You ask yourself, where are you when these things are called location-wise? That area right there is sort of a resistant area. So then you combine, well, we're in a low volume environment going right into holidays. You realize these lows are like Friday and Saturday or whatever, right? Friday, Saturday, Sunday, whatever. You should probably not be getting involved like we talked about earlier. But if you must, you go smaller, because if this thing fails to follow through, you get this. because a lot of people are getting long, or some people are getting long, and then they're getting pushed out. That's what happens. It happens over and over. Does that make sense, you guys? So that's pretty much like how all these trade scanner trades work. They're all based on the same idea, whether it's a Forex pair, a stock, or a coin. It's all the same. So you can use these levels and you can use the structure to kind of give you that extra sense of, should I be with normal size? Should I be with smaller size? As a way to control your risk. And like I said, when we have the trailing stop, if this thing runs, if this thing happens to be a runner, right, then you have a point of reference. You could check your dashboard, you could log in, and you could see the trailing stop. And you can just keep adjusting your stop based on that number. Okay. And if you get a big move, like for example, a move like this, something like this, and the trailing stop is running, it can keep you in for a good portion of that move. That's the whole point. Okay. It doesn't always work that way. As you can see, this kind of move is not common, right? Most of the time you get this kind of stuff, right? So the trailing stop isn't, obviously if the trailing stop is active at that point, maybe it helps you squeeze a little more out, but it's best to respect that stop, and wherever it lets you out, you just get out, right? You have to adjust the stop yourself, but you have a number that will tell you. That's going to be implemented soon, just to be clear. All right. Okay, at the time the signal, 2248. Okay, so let me just throw that in there real quick, Steven, since you took the time to calculate it. So the stop loss, 2248. All right. So this got stopped out based on at the time of the signal. That was the stop right there. Okay. And the entry was 2273. About here. Is that right? 2248 and 2309. That must be a smaller time frame. That must be the 1 hour. 2248 and 2309. 2309 is like here. Is that the 4 hour? So that was that. I mean, the ratio makes sense. This is still smaller than the take profit, right? And as you could see, it went right through that stop. That was the raw scanner trade. Okay. Does that make sense? Don't want to confuse people. But if you took a trade like that, again, okay, that is the 1 hour. All right, no problem, Steven. You know what? You don't have to generate the 4 hour. Let's just use the 1 hour at 1 hour as an example, because the trade would have been taken right here, right? The point, the question that you have to ask yourself is that a good place to take the trade? And you can argue that there's a possible double bottom there and this and that. You can make those arguments at the time, all right? But you also have to consider the volume, right? The time of the month you're at or whatever, if it's a holiday or not. And also this was a previous resistant area. So that resistance may act again. And of course you get the rejection, right? And you get stopped out. So my point is you can use the context in conjunction with the trade scanner signals to help filter them further and see the market in ways that the trade scanner is incapable of seeing. All right. Okay, cool. So I know I've been talking too much. I usually want these streams to only be a half hour, but I talk too much. All right, you guys, any quick questions that I can answer? Let me see what I have over here. Okay. Okay, I don't see anything there. Any questions? Any questions, you guys? Oh yeah, so I see the hit thing with the short term. Yeah, short term, look for the trade scanner, right? I mean, this week I would be careful because I said low volume. So you don't want to be aggressively chasing things. But if you're going to do something, when you have a tool like the trade scanner, it's basically doing all the work for you because it's waiting for a certain type of setup. The setup goes off, you have a nice point of reference, right? And then you just go through that evaluation process that I just showed you here. And with these levels on Bitcoin, this type of thing, I suspect that the trade scanner will probably be calling some trades by Wednesday or Thursday, maybe sooner, right? I wouldn't be surprised to see a couple of longs go off, right? But again, it's gonna go through the same situation that we're talking about here. All right, cool. Hey, Aries, good to see you. All right. I hope you found me on TradingView there the other day. I can't believe this guy, you couldn't find me on TradingView. I was going to write them a letter, be like, how come no one can find my profile on TradingView? But anyway, cool. Good to see you. All right, you guys. So if that's it, I don't see any other questions. I want to thank you all for joining me today. I hope you got something out of this stream. Please press the like button, the subscribe button, the boost button, so that it'll help me along here and help me grow the channel. If you haven't joined the free community, there's a link in the description. And hey, if you're interested in the trade scanner, maybe wait a week and then do the free trial, right? Because you have a 1 week free trial. And I explained all that stuff from before, but we have 1 week free trials on all monthly packages now. Okay. So you get the full effect, you get the emails and everything for 1 week. And if you don't cancel, you will automatically be billed, and I will not refund the money if you forget to cancel. Just letting you know. All right, you guys. So again, thank you for joining me today. I hope you enjoyed your holiday. I will be streaming next on Tuesday. Okay. If I don't have, I'm probably not going to stream before that. So Tuesday instead of Monday because of the holiday. So that'll be the new year. So again, everyone, have a happy and healthy new year. Enjoy with your family and all these things and all that. Have fun. Don't drink too many omers. And that's that. Okay. So again, I hope to see you in the community before then, because we're going to be paying attention to things in there. But if I don't see you, again, enjoy and have a happy new year, healthy new year, and prosperous new year. And I will see you. We'll stream again on Tuesday. All right. So again, thank you. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. Thank you for watching.